Hello, welcome to Dornbush download number 30-something.
Yes, good morning, Dan. Yeah, another Wednesday, another download. They seem to come by pretty quickly these days.
It's unbelievable, isn't it?
Yeah. And Dan, I guess big news yesterday, of course, Reserve Bank.
Nothing news.
Yes, yeah, keeping rates on hold, which was certainly a surprise. I think the majority of people, economists,
We're
experts,
expecting it. Yeah.
I had a quick look on the ASX interest rate tracker, and there was a 72% chance or probability that rates were going to be cut. So
and then they've left them on hold.
Yeah, so a little bit of a reprieve, I guess, for self-funded retirees. They'd be happy. They're going to squeeze a little bit more interest out of their savings accounts for the time.
Maybe only for a short time, though, Michael. Hey.
Yes, yeah. Still a very strong easing bias, isn't there? And I think the Reserve Bank's still quite concerned about the growth prospects for Australia. Also, still pretty concerned that the Australian dollar remaining resiliently high. Yes, I think they'd certainly like to see it in the low 70-cent range.
Yep.
But yeah, a little bit of a reprieve there for retirees. But of course, mortgage, people with mortgages looking for that extra little.
Would rather that bit of a drop, wouldn't they? They're still trying to juggle the Sydney housing market, though, Michael, aren't they? I really don't think they know what to do with that.
Oh, it's a tough gig, isn't it? I mean, and I think Glenn Stevens, not that I'm an expert, but he seems to be doing a pretty good job, doesn't he? He's not jumping to extremes one way or the other. He seems to be just sitting back, taking a breather.
I think he tries to let it flow through the system, doesn't he, and see how things develop. Is a good way to put it.
Yeah, absolutely. But no, it's a good point, Dan, isn't it? The Sydney property market really is a bit of a worry, isn't it? And it seems to be contained in Sydney too. Melbourne's seeing a little bit. Other capital cities around Australia not seeing that sort of exorbitant house price growth that Sydney's seeing. But yeah, it's a real hot potato for the RBA.
Just being in the city in Vegas City on the weekend, there's a lot of construction going. South Brisbane, West End area, a lot of units going up. So it's certainly starting to flow in, isn't it?
No, absolutely right.
Very interesting.
Brisbane's a big place now, absolutely. And what have you got on the buy front, Dan?
I've been following AMP Capital China Growth Fund for a while now, Michael, and we were having a look at the China chart the other day, weren't we? It's just increased considerably. These guys actually buy shares on the China A-share market, and one of the few external to China companies that are allowed to buy on the A-share market. So it's interesting. 40% of their investments in financials, 22% in capital. Interesting, only 8% in healthcare, and that's been one sector that's really been powering, hasn't it? Last traded at around $1.42. But it's cheap compared to their net tangible asset value, Michael. It's sitting at $1.57 as at February. So it might be worth having a look at. Since inception, which is I think 2007, they've done about 10.6%. So not a bad yield. Considering the market, it charged away in 2007, didn't it? And then came back pretty damn quick after that. So to hold that 10 point whatever it is, it's pretty good yield.
Yeah, definitely. And I guess too, it's a good way for people to sort of get at that piece of the asset allocation pie, that international share exposure that we all sort of say people should have some exposure to. But you're dead right. I mean that Shanghai Composite Index, which is sort of a mixture of the A and the B class shares. China's a bit different with these very different listings. But I think it's up about 95% from this time last year. So again, a couple of interest rate cuts in China has really seen their market kick on.
Interestingly enough, though, I think we're seeing a lot of money out of America and Europe flowing into China now as well. So the investors are looking for that growth from there, I think. So.
Yeah, definitely. And certainly too, a quick note to all BHP shareholders. They would have received their little box of goodies from BHP in the last couple of days. A lot of info on that South 32 demerger, 200 odd pages. Fair bit of reading there. But look, certainly there is the option we've seen for this sale facility. So encourage all BHP shareholders, if they're not quite sure what to do there, give us a quick call, get our two bobs worth. Been a lot of speculation as to what the price of this South 32 might be, but as each day goes by, the price seems to be getting lower and lower. Certainly a
range.
They
like to talk things down though, don't they?
Oh, they do, yeah. It's looking like anywhere between a range of $2 to $5 a share. Still nothing concrete, but yeah, certainly the last couple of articles in the last few days has been more towards the $3 to $2 end. So, but yeah, a little bit complicated. So certainly if you've got any questions or queries, give us a call and we're happy to give you our 2 bobs worth.
And if you're not interested in holding South 32, that share sales facility certainly is the way to go. The BHP will just basically sell them for you and send you a cheque.
Yeah, absolutely right. Yeah. Much coming up in the week ahead, Dan?
I don't think so, Michael. Economically wise, there's not a great deal, is there? I think some home figures out, but other than that, not too much in Australia. So.
Yeah, we've had a bit of an onslaught of late, haven't we? But you're right, the waters seem to be getting a bit clearer. I know the Federal Open Market Committee talks about their interest rate decision just gone, so hopefully we'll get a bit more insight there. But
get a bit more insight into when they're thinking about doing it. So,
absolutely. It's going to be a sooner rather than later thing, that's for sure.
That's going to be interesting, Michael, isn't it? I think ultimately it's going to be positive for our market, but I'm sure we'll see some volatility to the downside when they do raise rates. But from the Australian market, it should bring our exchange rate down, which should be more positive for us, shouldn't it? So.
Yeah, absolutely right. Yeah, that US dollar's been extremely strong, hasn't it? Against all the currencies, not just ours, of course. And of course, another rate rise over there. We'll see the US dollar go through the roof.
Flowing back into the US.
Yeah, definitely.
Interesting times.
Absolutely right. Yeah. Well, thanks again for watching. We'll see you next week.